Serial trader here. Just going to do a quick update on Bitcoin. So in the last video I proposed multiple scenarios. Some were fairly bearish, some were, somewhat bearish but then long-term bullish, and then some were more immediately bullish. So let's look at making the case for that immediately bullish outcome. So I've done some labeling here. So we have a 1, 2, 3, 4, 5 up for proposed wave 1 of larger degree. We have an ABC down for W, ABC up for X, and then ABC down for wave Y of an overall WXY double zigzag, proposed wave 2 of larger degree. And then if that was the case, we would be expecting a pretty strong move up in wave 3. Now, let's have a look at this. So I've done a Fibonacci retracement from the overall move from the low at 6,000 to the high at 11,788. This is using Bitfinex pricing, and Bitfinex is one of the more liquid exchanges I was looking at. So liquidity adds a certain amount of integrity to the price data. So that's why I've chosen to use it for ongoing analysis. Doesn't matter where you trade, the levels are going to be pretty similar, although there's at times distortions and certainly arbitrage opportunities because of those distortions. Alright, so we have the 78.6% retracement, Fibonacci retracement of this overall proposed wave 1. That comes in at 7238.6. And where did we stop declining here on this proposed wave 2? We stopped declining at 7240. So less than $2 above a significant Fibonacci retracement level, and we're reversing quite nicely off of there. And there's certainly reasonable volume as well to support that. So you don't want to try and pick the bottom. You let the chart pick the bottom for you. So this is a hint that there may be a bottom. There's certainly a level you can attempt to trade against, and that level at this point will be 72.40. Okay, so put a stop at 72.39 on Bitfinex, and if you're right and that's the bottom, you won't be stopped out, and you potentially have multiple thousands of dollars of upside ahead. And right now that would be less than $1,000 of risk. So as far as risk reward, pretty good. As far as overall risk, you have to manage your position size. So if you're trading 100 Bitcoins, that's still a very large dollar risk, despite having a good risk reward ratio. If you're trading 1 Bitcoin, it's a fairly modest risk, at least in the world of cryptocurrencies, and an attractive risk reward setup. So you have to not just determine the risk reward, also the probability of your actual setup being correct, which in this case, it's reasonably high probability. You have a nice reaction off that Fibonacci level. But the other aspect of the risk management is the actual position size itself. So yeah, if you're trading 100 Bitcoins and you have $1,000 of risk per Bitcoin, well, guess what? You're still risking $100,000 to see if you're right. It's still a pretty big risk. Now, if you're a multimillionaire and 100 Bitcoins is chump change to you, maybe that's still fine. It's totally an individual thing. Anyways, let's have a look at these momentum indicators as well. So you have the moving average, convergence, divergence, MACD, and you have RSI. I'm choosing to show these two because I found them to be quite helpful and reliable. There's so many other indicators, but a lot of them are just displaying the same price drive data and just doing it in different ways. But just pick what works for you. Anyways, so even though price was making lower lows, and I'm illustrating that with this little downward trend line, at the same time MACD was making higher lows and RSI was making higher lows, and actually RSI is right on the cusp of possibly a higher high. So what is that called? That's called a bullish divergence on MACD, a bullish divergence on RSI relative to the actual still declining price. It's showing you that the decline is weakening and ripe for a reversal. In fact, most significant bottoms or tops are accompanied by divergences, either bullish or bearish divergences. In this case, bullish divergence because we're going down and looking for a turn back up. So, with that being said, if you actually wanted to be extremely confident, well, this would be a good level to break. So if you broke above, let's call it 10,000 to be safe, it's actually 9,900. That would be a really good sign that this overall corrective pattern from our proposed wave 1 was complete, and you'd be heading up significantly higher. And you may likely not see these levels again for a very, very long time, if ever, depending where this is going. But who knows, right? Anyways, And okay, by waiting for that, you'd be giving up, oh, a couple $1,000 at least from current levels. But your confidence level as to the fact that you actually had a bottom of your trading gains would be much higher than it is now. Like right now, it's really early. In fact, we haven't even broken the first resistance level, which comes in at around 8,600 or so. So right now, your stop could be tighter, but the likelihood of it being hit is still higher. Whereas up here, or even more so, if you actually take out this wave 1 extreme, which was at 11,788. So if you got above that, then you can be really certain you're going up thousands of dollars more from there. And of course, yeah, your stop, if you're trading against this bottom, will be farther away, but the likelihood of hitting the stop, again, greatly reduced. So do you want to try and be right with a tight stop, but more likely to get hit? Or do you want to be fairly confident you're right, but with a looser stop and just kind of ride it out? And again, depending on position size, how much total risk you have. That's really an individual choice. Me, sometimes I feel like really trying to get in there with a tight stop. Other times, I'd rather wait for some confirming price action. It really depends on what I'm trying to do. In the case of Bitcoin, okay, if you give up $2,000 or even you give up $4,000, but you're going to 30 or 50K, well, who cares? You're still capturing most of that up move. And at least if you got in later, you're going to be a lot more confident that you're actually going to do it. Anyway, Serial Trader signing off. Let's see what happens.